Skyharbour Resources is a high-grade uranium exploration and early-stage development company. We've been around now for about 10 years. We were there through 2013, 2014, 2015, very difficult mining market and a very, very difficult uranium market, but it afforded us a contrarian opportunity to go and purchase these initial projects that we had acquired at pennies on the dollar. We've now built up the project portfolio to 18 properties scattered throughout northern Saskatchewan in the Athabasca Basin, which is the highest grade depository of uranium in the world. It's also the #2 mining district as ranked by the Fraser Institute, that's Saskatchewan. So it checks all the boxes for investors. 18 projects now totaling about 1.2 million acres of mineral tenure. So we're one of the largest landholders in northern Saskatchewan. These projects range from earlier stage exploration properties right through to more advanced stage exploration assets that host small resources and high-grade uranium showings. We group the projects into two tiers. So there's our two co-flagship projects, our Russell Lake and our Moore Lake projects. They're adjacent. They're both in the southeastern part of the Athabasca Basin with McArthur River, the largest, richest uranium deposit and mine to the north, the Key Lake Mill to the southwest, Denison's Wheeler River project, which is just to the west, and other claims to the east. These two projects collectively represent over 100,000 hectares prime real estate on the eastern side of the Athabasca Basin. We've just started a 10,000 meter inaugural drill program at the Russell Lake project, so that's going to be a primary source of catalyst. And then the secondary and tertiary projects that we have outside of those two main projects, we act as a prospect generator and we look to option or farm out these projects to partner companies. We now have 7 partner companies. We have option agreements that total over $70 million in partner-funded exploration expenditures and cash and share payments coming into Skyharbour, assuming that these partners all earn in. So it's a dual-pronged strategy. It allows our investors to get exposure to drilling we're carrying out at Russell and Moore Lake, as well as to several other drill programs that are funded by these partner companies. When we have been building up this portfolio of projects, there's lots of different criteria that we look at. In the early days, as I mentioned, when we started the company, quite frankly, we were able to acquire these projects at very, very attractive valuations. The uranium market has improved, the price has been increasing, so the valuation of these projects is increasing. The big thing for us, obviously, is looking at the geological prospects, the potential to make new high-grade discoveries. So we have this dual-pronged strategy, as I mentioned. We're carrying out meaningful large exploration and drill programs at our core projects. We're looking to emulate the success that other notable high-grade discovery companies and exploration companies, which have generated billions of dollars of return for their investors, companies like NextGen, like Fission, like Hathor. These companies, more recently Fission 3.0, these companies have created a lot of wealth for their shareholders over the years, and we're looking to be that next big discovery story in the Athabasca Basin. But we have these other projects, as I say, secondary and tertiary projects. A lot of times they've just had a little less money spent on them. They're not as advanced. We look to bring other partner companies in to fund the work, the initial exploration and drilling at these projects. We retain a minority interest, a royalty, and we typically do have a fairly large shareholding, equity holding in the companies that come in to work these projects. So this is going to be our busiest year ever in terms of news flow, starting with the major 10,000 meter drill program that we've just commenced at our Russell Lake project. This is a deal, Russell Lake project that we optioned from Rio Tinto last year. It was a transformational acquisition for the company. Rio Tinto is now one of our largest corporate shareholders alongside Denison Mines. Denison's been a very large shareholder of the company for the better part of the last 6 years. Their president and CEO, Dave Cates, is on our board. So we've got two notable strategic, corporate strategics in there. Russell Lake, as I mentioned earlier, it's adjacent to our existing flagship Moore Lake project. but it's a big property just south of the McArthur River mine. It's had a fair bit of historical exploration, but a lot of the previous drilling was exploratory in nature. So we're now going in there with a new geological model. We've looked at all the historical data, geophysical and geological data. We've put that all together, we've re-examined it, remodeled it, and we think we can deliver a new high-grade discovery at the project. So 10,000 meters initially at that project. It's just started, so lots of news flow. That'll take us right into the summer months. We could look to expand that later in the year and add on another 5,000 to 10,000 meters. We're fully funded for the drilling, fully permitted as well. But we also have a number of the partner companies. As I mentioned, we have 7 of them. Several of these partner companies will be carrying out programs this year. We're expecting somewhere between 20 to 30,000 meters coming in from these partner-funded projects. So that puts the total amount at 30 to 40,000 meters of combined drilling over the course of the next 12 to 18 months across 5 or 6 projects. So we really are a one-stop shop for investors to get high-grade discovery potential and exposure across 6 or 7 projects throughout the Athabasca Basin, numerous operators, and lots of news flow. Yeah, I mean, look, we could spend hours talking about the uranium market. There has been a complete 180 in this market over the last several years. There's this nuclear resurgence or even renaissance that we're seeing right now. So the sentiment towards nuclear energy and towards the uranium market has changed completely in the last couple of years. There's really 3 major macro trends right now underpinning this resurgence. First is electrification, seeing the growing demand for electricity globally. Nuclear energy is the only source of baseload, emissions-free, reliable, affordable, scalable electricity generation. Hand in hand, the second major trend that we're seeing is clean energy, so decarbonization globally. Again, this is the only source of baseload emissions-free electricity. So we're seeing places like China, India, other parts of the developing world building out their nuclear power plants, but we're also seeing new growth potentially coming from, in the West, coming from these small modular reactors, SMRs. So there's a lot of new demand that's going to be coming on over the next 10 to 20 years. Now that's in the backdrop of a supply side that's been hit pretty hard. It shrunk from about 160 million pounds down to about 130 to 140 million pounds, and that's in the backdrop of about 190 to 200 million pounds of annual demand. So a major structural deficit that's formed. And then hand in hand with that, the third major trend that's really driving this right now is energy security. And we've seen just under a year ago, the war break out in Ukraine. Russia is a major player in the uranium market, in the nuclear fuel cycle, in particular in the conversion and enrichment parts of the fuel cycle. So as we see Russia and potentially other eastern sources of supply cut out from the market, that means Western utilities are going to have to start buying material from Western suppliers. And that's where companies like Skyharbour and exploration development and producing companies in the West stand to benefit. So there's a lot of tailwinds right now. I think this year we're going to see another breakout in the uranium price. It's trading around $50 a pound. We saw it trade as high as $65, almost $70 a pound in 2022. We've seen it consolidate here around $50. There's enough, I think, enough tailwinds right now to drive a much higher price in 2023. Yeah, I mean, look, we're an exploration, advanced stage exploration, early stage development company. We're drilling, right? We're de-risking these projects. So, needless to say, you can never guarantee exploration success, but that's a part of the reason that we've built up the prospect generator business, so that we have multiple shots on goal with us and our partner companies. So, that's one thing. Obviously, broader market selling off, the big board selling off. We saw that through the latter part of 2022. We've pulled back along with all of our peers. I've been actively purchasing shares in the market. We've started to see the price move back up in the right direction. But there's lots of factors, there's lots of variables at play. I'm, needless to say, very optimistic for 2023. Again, I think that all the news flow and the discovery potential that we offer, coupled with a rising uranium price, I think it's going to be a really good year for the company and its investors. I think we've covered most of it. Please do check out our website at www.skyharbourltd.com. All of our contact info is on there. Happy to chat with anyone that's interested in the company or in the uranium market.